Hello, friends. Good evening to all of you, and welcome to our series of Unleash Your Potential. As the name suggests, we feel that we have a huge potential within ourselves. And with this kind of series, we want that all of you can fly high like Garuda, what our ICI emblem speaks and says, and that is the motto of our institute also, that we are alive, awake when others are asleep, and we are the partner in nation building, and we can do the best of the things for ourselves, for our family, for our society, and nation as a whole. I understand that as women specifically, young women chartered accountants are occupied at various levels in industry as well as in practice. However, we have seen that a lot of women who have taken a break in their career are actually want to learn a lot and want to come back in the profession. Various women and the young professionals who are in industry wants to come and join the practice. They also want to upgrade their knowledge. And with this, unleash your potential. We are here to support all of you, to motivate all of you, and to ensure that you get all the best of the things in profession. This is a series where you get the case study based all sessions, and this session will serve and correlate the practical things. We have speak best of the speakers all across India. We have the faculty like C. Dipali Mehta, who is very seasoned in GST. We have the coordinators like Karishma, who is also the co member in WIS. We have the coordinators, Anupama Ladda, who is in at the Nagpur branch. And what I can say and speak about C. Shanubal and entire team who are there 24/7 for working for the best of the committee and serving best to all of you. So participants, every Monday, Tuesday and Thursday, unleash your potential 4 to 6, block your time. All the subjects you will get best of the servings and addition to the your valuable knowledge. I assure that we give the best knowledge to all of you. With these words, I request the coordinator to take up the session. I welcome the speaker, Deepali. I welcome all my wonderful and participants who are there in with us and taking the benefit of this series. So once again, welcome to all of you. Thank you so much. Deepal, you can start. I don't know how who is taking coordinator now.
Yeah. Yeah, should I start the meeting or?
Shanu, what is the structure?
Yeah, let me introduce.
Anupama ma'am.
Yes, let me introduce to you our learned speaker for today's program, CA Dipali Paresh Mehta, who is the founder partner of Mehta and Shah, a chartered accountancy firm engaged in providing services in the area of taxation, advisory, and accounting in the area of direct as well as indirect taxes. And she has received the Best Group Leadership Award for the year 2010-11 and also 2014-15 at Intensive Studies Circle meeting at GST Practitioners Association, Maharashtra. She has received Best Column Writer in 2018 and 19 and Appreciation Memento for dedicated contribution for 2019, 2021, 22 and in GST Review Monthly Magazine. Also, she is the committee member of indirect taxes in CTC, and she has been giving lectures in CP study circles, meetings, and WRC Chamber of Tax Consultants and GST intensive study circle, also at coaching classes. She has been training administrative personnel of corporates on procedural aspects of complying in indirect tax laws. I welcome CA Dipali Mehta ma'am to this program of Unleash Your Potential, and I now hand over the dais to her.
Good evening, everybody. It is my utmost pleasure to give a lecture on this in the topic flawless input tax credit in this top series called Unleash the Potentials. It's a super web series started by CA Preeti Sauda, chairperson of WIMC committee. It is a really foresightedness to bring all the female chartered accountants of our country. And I believe that this series is going to give a huge potential to everybody and help them in their day-to-day practice. And in any case, if anybody has any issues, we all are always available to serve you. You can ask us query anytime and we can help each other and uplift our own standards of living. Yeah, so I will just share my screen. So friends, flawless ITC. First of all, this is the Women and the Young Members Committee. Flawless ITC. So we all see advertisements of getting a clear and flawless skin. So, and we think, wow, we are going to get this sort of a skin. So is this a truth or a myth? That we will just open up, we'll see as the time goes by, and we'll see whether the ITC is flawless or we have some or it's just a myth that you are going to get a flawless ITC. The sections which the input tax credit covers is, first of all, the main section is section 16, where you are eligible to take the credit on the basis of the conditions prescribed in the rules. Second is section 17, where there is apportionment of credit. Whatever credit you are eligible in section 16, out of which actually is apportioned to your electronic credit ledger, that comes in section 17. Also in section 17, there is block credit. Block credit means the credit, even if you are eligible under section 16, but still under section 17, you are not eligible to claim that credit. That is called block credit. So certain credits, none of the registered dealers are eligible under certain circumstances or certain conditions. Section 18 is availability of credit in special circumstances. There are certain circumstances, like you can say changing from composition to taxable, or selling of capital goods, or merger, demergers. So such availability of credit under such circumstances has been prescribed in section 18. Section 19 is taking input tax credit in respect of inputs and capital goods sent for job work. So whenever any goods are sent to the job worker by the principal, so and the principal is going to take the credit of the same. So section 19 covers that. Section 20 is covering the manner of distribution of credit by an input service distributor. And section 21 is manner of recovery of credit distributed in excess. Now here we are going to cover section 16, section 17, section 18, which are the main sections and applicable to majority of the taxpayers. Section 19 is applicable to selected taxpayers, 20 also applicable to very selected, only the big companies where there are HOs and branches. And 21 is also applicable to certain taxpayers only. So today we basically covered 16, 17 and 18 along with the rules applicable to these sections. Now, first of all, what are the types of input tax credit? Okay, the first is inputs. Now, what do you mean by inputs? The same has been defined in section 2, clause 59, that inputs means any goods other than capital goods used or intended to be used for making outward supply in the course or furtherance of business. Now, you must have seen in the lecture, the first lecture, where the definition of supply must have been explained, where the course or furtherance of business is very important. So inputs means your goods which are used for making outward supply, like your raw material. If you are a manufacturer, then your raw material is your inputs, which you are used to make the outward supply, the end product. Then if you are a trader, then whatever goods you purchase, the finished products, that is your inputs, which you are then going to sell as an outward supply. Okay, if you are a service provider, then technically there is inputs means the goods which you are going to use to provide the services, like you can say your printing stationery, or in the service provider, service provider. So this is what is the definition of inputs. Next is capital goods. Now, what do you mean by capital goods? Capital goods mean so utilized in the course or furtherance of business. Then for service provider, capital goods means again if you are in IT infrastructure, that is information technology, then again the computer, the setup, all those things are your capital goods. Your air condition, your you can say your telephone lines, all this becomes your capital goods, because this all are capitalized in your books of accounts. So whatever is capitalized in your books of accounts becomes your capital goods, but this has to be used in the course or furtherance of business. Now, for example, many business purchase gold, okay, just for investment sake, and they capitalize in their books of accounts. Now, gold is basically goods, okay, right? But it doesn't, just because you are capitalizing it, it does not become, it is capital goods, and it does not mean that you can claim the credit of the same, because this gold you are not going to use in the course or furtherance of a business. It is just going to be an investment. Next comes input service. Now, what do you mean by input service? Just as inputs means goods which are used for making outward supply, same way input service means any service used or intended to be used for making outward supply in the course or furtherance of business. So, for example, services like if you are a manufacturer, then labor contractor, whatever you are taking, that is a service which you are going to use for making the end product. Then if you are a trader, then the services you use is of transportation or packing services, if you are outsourcing your packing the goods. And if you are a service provider, then obviously whatever services you are providing, whatever, and for that, if you are taking any input service, like for example, consultancy, commission, all those things becomes the input services which you are using it for making the outward supply in the course or furtherance of business. So these are the three types of input tax credit. Now we know what is inputs, what is capital goods. Now for input tax credit, the word is input, tax and a credit. So what do you mean by input tax? Now input tax is also defined in the GST. It says in relation to a registered person, it means the central tax, state tax, integrated tax, union territory tax, Tax charged on any supply of goods or service or both made to them and includes IGST imports, RCN, but does not include the tax paid under composition levy. So if you are procuring goods from a composition dealer, then it is not an input tax. Otherwise, whatever goods or services you are procuring in the course or furtherance of business, just as we saw in the earlier slide, so whatever GST is levied on all those, that is the input tax. And input tax credit means the credit of this input tax. So you will see here down the picture depicts that all sorts of goods and services we procure for carrying on the business. So that will cover under input tax. Now we go to main clause, clause 16. Now clause 16 has various sub-clauses. The first clause is clause 16.1. Okay, now what does this clause 16 subclause 1 say? It says that a registered taxable person, that is this person who is there, shall be entitled to take credit of input tax. Input tax, we just saw the definition, charged on any supply of goods or services to him, which are used or intended to be used in the course or furtherance of business. Now, already the input tax definition says that the goods, whatever taxes are levied on the goods, that is your input tax. Now, input tax definition does not say that this has to be used in the course or furtherance of business. It just says CGST, SGST, IGST is your input tax. But 16 subclause 1 says that this you are entitled to take the credit of this input tax which is charged on the goods or services supplied to you only when it is used in the course or furtherance of business, used or intended to be used in the course or furtherance of business. So what are the various types of input tax credit that I have described here, which I already mentioned earlier relating when I was explaining to you the definition of inputs, raw materials. So see, raw materials becomes your inputs. Then these are the other goods which you are going to purchase, the office itineraries. These are the sort of the services which you are going to provide to client services, business services, various services. So the whatever GST is charged on all this procurements which you are going to procure for your business, that is available as a credit. That is section 16 subclause 1. So 16 subclause 1 is very clear that whatever goods you purchase in your business, all the credit is available. So you are happy. Now subclause 1 also has certain conditions prescribed. Okay, these conditions are prescribed in rules related to the ITC. That what all things are necessary to claim the credit. Now there is one rule 36, right? Just a second. Yeah. So this is the rule 36, which says there should be documented requirements and conditions for claiming the input tax credit. Now, input tax credit shall be availed by a registered person, including the input service distributor, that is the ISD, on the basis of the following documents. First of all, you need to have an invoice, and that invoice should be in accordance with section 31. Wherein everything, whatever is prescribed in the invoice should be there in the invoice. Okay. Second is that there is one self-invoice, you can say clause in section 61, that is clause F of subsection 3. What do you mean by self-invoice? And when you have to do this self-invoice is required when you are procuring any goods from an unregistered dealer on which the recipient has to pay the tax as a reverse charge mechanism. So when you are paying tax on the reverse charge mechanism and this particular supply you have procured from an unregistered dealer, then you have to do self-invoicing and give that invoice as a proof of document for claiming the credit of that particular reverse charge which you are going to pay. Next is the debit note, whatever is issued, which has to be as per the provisions of section 34. There is bill of entry. Bill of entry is for claiming the credit of the imports. Then input service distributor invoice or credit note has to be there to claim the credit of the input tax credit issued by an IST. So these are the basic requirements as far as clause 16(1) is concerned. So unless and until you are fulfilling those conditions, you are eligible to claim this credit. Once you fulfill those conditions, you are eligible to get the credit. This is will be eligible to get the credit under clause 16. Okay, now then we will go further how various of the restrictions are imposed on this credit. So till now it's a flowless credit, right? Because you can claim whatever taxes charged. Now we come to this next section. This section 16(2). Now what do you mean by section 16(2)? It says you cannot get the ITC unless all these conditions are fulfilled. Okay, can you see the circle? So many conditions needs to be fulfilled if you want to claim the ITC. What are those conditions? First of all, possession of tax invoice. So what we just saw in Rule 36, that documentary evidence that tax invoice should be there with you. What is the second thing? Second is that details have been furnished in GSTR1 and communicated to the recipient. Means only issuance of tax invoice is not sufficient. The supplier who is supplying the goods to you, he has to furnish his details in GSTR1. Now GSTR1, I'm sure you are aware, that is a return for the outward supply. So there they have to furnish this. And when they submit those details in the GSTR1, the same will be communicated to the recipient in GSTR 2B or 2A, whatever we say. Now 2B and 2A, I'm sure everybody is now aware of this. Third option, compulsion, is that you have to receive the goods and services. The goods and services should be in actually possession of you, then only you can claim the credit. Fourth is details communicated are not restricted under section 38. It means that whatever is communicated to you here under 2A, 2B, that are not supposed to restricted under section 38. Now, what is this section 38? Now, this section 38 says that there are certain circumstances under which the ITC will be restricted. Okay. What does it say? The client has invoices, received goods, paid tax, followed everything as per section 16. Then also you cannot see the ITC. The department is, the taxpayer is questioning the department that I have everything. In spite of that, the department cannot see the ITC. Now, why the department cannot see the ITC? First is, during the initial period in which the vendor has obtained GST registration, time period will be prescribed. So, section 38 says that whatever is communicated to you in 2A, 2B, there also the ITC will be restricted. Now, how this will be restricted, that they have not yet, this section is notified, but they have not yet come out with any particular statement which they are going to put online, through which we'll come to know that whether this ITC is available to us. We are waiting for that on the portal. So, vendor who has taken a new registration, then their ITC will be restricted for a certain period that they will prescribe. If the vendor has defaulted in payment of tax and when such default has continued for such period as may be prescribed, then also that ITC will not be available. That period is also not yet prescribed. Details of output tax liability submitted in Form 1 exceeds the output tax liability by a limit which will be prescribed, which has not yet. So this rule has yet to come. The section is notified. So if your GSTR1 has more taxable liability than your GSTR3B by a way of a certain limit, then your ITC will be restricted. In vendors, so then henceforth you need to take care of what you are giving in GSTR1 and what you are paying in GSTR3B. Why? Because the opposite person will not get the ITC. Vendor during such period as may be prescribed and avail ITC on the movement of an amount that exceeds the credit that can be availed by him by such limit as may be prescribed. So this is also, they will prescribe that you can avail the credit only to a certain extent. If any vendor has defaulted in discharging his tax liability, then subject to such conditions and restrictions as may be prescribed and such other class of persons as may be prescribed, then under all these circumstances, ITC will be restricted. Now, all these circumstances are yet to be prescribed. Next is tax charged has been paid by the supplier. So whatever tax the supplier has charged on one of the ITC has to be paid by the supplier by filing 3B or by way of a DRC 03, it has to be paid. Then GSTR 3B has been filed by the supplier. So not only the tax needs to be paid, the GSTR 3B also has to be filed by the supplier, the person who is going to supply. Then you have to make the payment to the supplier within 180 days. So if you are not making the payment to that supplier within 180 days, then your ITC will have to be reversed. But you can reclaim it when again you will be when you will make the payment. So that is why I have said that don't ask me why I am treating you cold. I'm not. I just quit trying and expecting. I'm tired of getting any hopes up and being disappointed. So what does it mean? That we are saying the government, when the GST came, it was one nation, one tax, ITC will be available flawlessly, and now all these restrictions. So don't ask me. I just quit trying and expecting, as I'm tired of getting my hopes up and being disappointed. So all these restrictions are available for taking the credit. 16.1 May, we are happy, we are getting the ITC. 16.2 May, all these restrictions, unless and until these conditions are not fulfilled, you are not going to get the ITC. There is 16.3. 16.3 says that where the registered person has claimed the depreciation on the tax component of the cost of the capital asset and plant and machinery, then also input tax credit will not be available. So if under the Income Tax Act, you have claimed the depreciation on this capital goods, plant and machinery, then you will not be allowed to claim the input tax credit of that tax amount. 16.4 prescribes the deadline by which you can claim the credit. Okay, what does it say? The 16.4 says that a registered person shall not be entitled to take input tax credit in respect of any invoice or debit note after the 30th day of November following the end of financial to which the invoice or debit note pertains. So for example, for the financial year 22-23, you cannot take any ITC after 30th November 23. Okay, so you still have, we are in May month, so we still have 6 months time to claim the credit of the previous financial year 22-23. But if you file your annual return early, but prior to 30th of November, then the date of furnishing of the annual return is the last date up to which you can claim the ITC of this 22-23 or any period. Okay. Now here they have said, 30th day of November. Now we all are aware that we have to file 3B by 20th. Okay. So when it says 30th day of November, it means that October return is the last return in which you can claim the ITC. The October GSTR 3B is the October 23 GSTR 3B is the last return in which you can claim the ITC of 22-23. So just because it is 30th day of November, don't think that when you will file the November GSTR 3B, you can claim the ITC. No. You can claim the ITC only till 30th day of November. Post that, you cannot claim the ITC. But mind it well, when this is applicable to something when you have not claimed that ITC at all. But if you are claiming the ITC and reversing it, okay, either because it is not reflecting in 2A, 2B, or because you have not made the payment to the vendor. So for some reason, if you are taking the ITC and then reversing it, so then you are allowed to take the ITC after 30th day of November also, when it is reflecting in 2B or when you are making the payment to the vendor. So So there were some legal provisions which were inserted from 1st January 22, which I have already communicated earlier, that your ITC needs to be reflected in your GSTR 2A 2B. Then only you are eligible to get this ITC, right? So 16.2 says that notwithstanding, it's a notwithstanding, it starts with a non-obstinate clause, that is notwithstanding anything contained in this section, no registered person shall be entitled to take the credit of any input tax in respect of any supply unless the details of this has been furnished in the GSTR 1 and has been communicated to the recipient. Okay. And then 36.4 says, no input tax credit shall be availed by a registered person in respect of this invoices unless it is reflected in form GSTR 2B. All right, so that is, I am just telling you it in short. Here the full section verbatism is given, but in short it says that the ITC should reflect in your GSTR 2B statement. That is 36.4. And 16.2 is saying it has to reflect in your GSTR 2A statement. Okay, so there is a difference here. But at the same time, here it says that it has to be communicated to the recipient of such invoice or debit note in the manner specified under section 37. So when it says that it is in the manner specified under section 37, matlab, section 37 is the filing of return of outward supply. So उसमें जो details दिए हैं वो हिसाब से, that is, it has been told that you have to file your statement of outward supply before 11th of next month. So if you are showing your invoice in your statement of outward supply and filing the statement before 11th, that is the manner specified under section 37. And then 36.4 says that you have to take is whatever is reflecting in your GSTR 2B, which will be picked up from your GSTR 1. So if you are filing your GSTR 1 late, say by after 11th of a particular month, say for example, we say of April 23, okay. Now April 23, you are filing your GSTR 1 after 11th May, say 13th May, 14th May, 18th May. Then the recipient will not be able to claim the credit. Why? Because you have not shown in your statement of outward supply in that month as specified under section 37, that is before 11th. So this particular ITC, because you have filed your GSTR 1 late, will be reflected when you are filing the 3B for May, that is in June. So your ITC will get deferred by a month's time. So that is what is this legal provision mentioned. Now suppose I have given an example here, that suppose you purchase goods from B for which an invoice was raised by B to AZ on 28th January 23. AZ claimed the credit on the invoice in 3B for Jan 20. Now AZ already claimed the credit in Jan 23, but the invoice was not getting reflected in 2B of Jan 23. Then later, so B then inquired that why this invoice is not reflecting in 2B. So what was communicated to B? There were two things which were communicated. The said invoice has been missed in GSTR 1 of Jan 23. It has been uploaded in GSTR 1 of Feb 23, which was filed on 10th March. Okay, so this is the first scenario, that the invoice was Jan 23, GSTR 1 was filed on time. But this particular invoice was not reflecting and it got reflected in Feb, which was filed on 10th March. Now, as per what we understood earlier, can we claim the credit in Jan 23? Technically, no, because as per these rules, we have to see that the credit has been to be claimed in Feb when you are filing the 3B of Feb 23, because this will be reflected in your 2B at that particular time. So many people are telling the argument that 16.2 में किधर भी mention नहीं किया है that it has to be reflected in 2B. But just as I explained to you just now, that the details have to be communicated to the recipient in the manner specified under section 37. So here also, if it is not communicated in the manner specified in 37, then you are not eligible to take the credit at that point of time. You can take it when you are filing the 3B of February. So now what will happen? That person has already taken the credit in Jan 23. So will that credit be denied? Technically, it will be that at the most officer can ask that person to pay the interest for 1 month, because he has taken 1 month for the period of 1 month, he has to pay interest because he has claimed the credit early by 1 month. Now, suppose the GSTR 1 only has been filed late on 14/2 and such invoice has been reported therein. Then what? Then also the same situation. Technically, so he has to take the credit only when it is reflected in 2B, which will be reflected in Feb 23 ka 2B. So then again, he has to pay interest of 1 month. Now, comment on the validity of credit taken in Jan 23 in the hands of AZER and following issues. Whether the post facto reflection of ITC in 2B is a valid compliance as per section 2AA read with 36(4). So, just as I explained to you, this is a valid compliance. That is what is 16(2AA read with 36(4), depicting to us how we are supposed to claim the ITC. And whether the interest can be demanded? Yes, the interest can be demanded for the month of Jan 23. And if GSTR 1 for the month of Jan 23 is filed by B after 30th November 23, then whether AZ shall be debarred from claiming the ITC in terms of section 64. See, technically, they should not be debarred. Why? Because, in your 2B, yes, it will definitely show as credit not available to you. And at present, there is no clarity on this part that if the GSTR 1 is filed after 30th November, will the credit be available? Because in your 2B, it will be clearly reflecting the credit is not available to you. And then in spite of that, you take the credit, the officer will not allow that credit. Okay. But now what if the credit has already been taken? Just as in this case, he has already taken in Jan 23 and GSTR 1 is filed after 30th November. See, at present, also the officers are not allowing this ITC. They are not able to understand section 16(4). See, section 16(4) says that you cannot take the ITC after 30th November. It never speaks that if you have taken earlier, then, and if that person is filing GSTR 1 late, then you cannot claim the credit. That section doesn't speak. So under 16(4), technically you are eligible for that credit which you have already taken. Okay, because see, the person who is filing in after 30th November also will be paying the tax to the government. So denying your credit and also at the same time that person also paying the tax, so the government will be double benefited, which is technically unconstitutional. So it should not be allowed, it should not be the case. But at present, litigations are going on for this and the departmental officers are disallowing the credit in terms of section 16(4). The second issue which I have covered is that invoice issued by supplier on 30th November 21, but not furnished in GSTR 1 till date. Okay. Now, if such ITC has been claimed up till 31st December 21, treating it to be falling within a limit of 5%. Now, if you must be aware, section 36(4), it came first on 1st October 20. Okay, when it came on 1st October 20, what happened was that time they had given the benefit of 20% ITC excess you can claim, and as per the in comparison to what is available to you in 2A 2B. Okay, then this section was amended and limit was reduced to 10%. Then the limit was reduced to 5%, and then from 1st January 22, it was said that whatever is reflecting in 2B, that much only you are eligible. So in 21, you are eligible for what is reflecting in 2B plus 5%. So what these people are trying to say that you have taken the credit of 100 plus 5, that is 105. Now this person has not filed a GSTR 1. They file that ITC is what you have claimed, that 5%. Then can you say that 5 rupees which you have claimed, for which that person has not filed a GSTR 3, still you are eligible and claim the credit? No. You are not eligible because 16.2 very clearly says that the tax has to be paid and the ITC has to be gone in your GSTR 1, which unfortunately has not happened. So even if it falls within the tolerable limit of 5%, you will have to reverse the ITC with interest. Whether ITC can be taken in 3B for any month filed after 1st Jan 22 if the same falls within 5% of eligible reflected in 2A. So what here they are saying that after 1st Jan 22, they had the rule that whatever is there in 2B, that much ITC is only eligible, no excess can be claimed. So 5% earlier you have claimed. So after January 22, you will be claiming the balance ITC. So what does it say? That if you are ITC has been taken in the any return which is filed after 1st Jan, the same falls within 5% eligible. No, again, you are not eligible to take credit after 1st Jan. The rules have changed. So whatever rules are applicable as on that date will be applicable to the 3B return you are filing. Now, whether this amendment will affect the eligibility of claim of ITC in 3B for inward supplies under RCM from registered persons. Yes, under RCM from registered person, this amendment will be applicable because the 16AA is very clear that whatever, if the details of invoice or debit note referred to in clause A, that is clause A of 16.2, has been furnished by the supplier in the statement of outward supply. So all registered transporters who are registered under GST, they have to file their GSTR 1. And when they file their GSTR 1, their credit is reflected in 2B. So you can claim the RCM credit only when it is reflected in your 2B. Import of goods where tax is paid in bill of entry. Now you all are aware that this includes IGST, which is paid on import of goods, is also visible in 2B. But as far as import of goods is there, since here they are very clear that this has to be, supplier has to furnish this outward supply, that is GSTR 1, and the import of goods person from whom you are purchasing the goods is a foreigner who is not going to file GSTR 1. So that thing is not, 16AA is not applicable to import of goods. So import of goods credit you can take on the basis of the bill of entry. Credit notes issued, yes, the 16.2 is applicable. ITC from ISD, yes, 16.2A to B is applicable, and whatever is reflected in 2B, that credit only you can take. Now, what they are saying is that even if it is reflected in 2B, still your ITC will be restricted. That is section 38, which we already discussed. So it says that even if it is showing in your 2B, still your credit will be restricted on the basis of the circumstances which I have mentioned earlier. Now, section 41. Now, what is this section 41? Section 41 is your self-assessed ITC. So, what do you mean by self-assessed ITC? See, till these rules were not there, initially in 17, 18, 18, 19, this section 41 stated that whatever you claim in your 3B return is your self-assessed ITC on the basis of your 16.1, 16.2, 16.3, 16.4. There was no this restriction of this 2A, 2B. 2A, 2B was not there also. So they say that time they have said that every registered person is eligible to take the credit in your return self-assessed. And that will be counted as your actual provisional ITC on which you have taken and which you have paid the tax. Now, this section 41, after this amendment in section this 2AA or 36, section 41 states every registered person shall, subject to such conditions and restrictions, be entitled to avail the credit of eligible input tax as self-assessed in his return, and the amount shall be credited to his electronic credit ledger. So here they have included the word such conditions and restrictions as may be prescribed to avail this credit of eligible input tax. So to avail the credit of eligible input tax, certain conditions and restrictions which are prescribed, which we already saw, 36.4, 16.2AA. When you fulfill that, you can take the ITC as self-assessed in your return. It further states that the credit of input tax availed by a registered person under subsection 1, that is the upper one, in respect of such supplies, the tax payable thereon has not been paid, then that shall be reversed along with applicable interest, provided if the supplier makes the payment of the tax, then the registered person can re-avail the credit. So all these things, they are going to come out with a statement wherein all this credit will be restricted. So if the supplier has not filed GST or 3B or has not paid the tax of whatever is charged on the invoice which he has supplied to you, then you have to reverse the credit along with interest, and this registered person can re-avail the amount of credit reversed by him in such manner as may be prescribed. So this was all about section 16, wherein they say that how much ITC is available. So the rosy picture doesn't end here. The flawless thing doesn't end here. It is further going on that once, after passing through all these hurdles, once you are eligible for the credit, now what? Now comes section 17. What is section 17? Section 17 is apportionment of credit. Apportionment of credit means whatever you are eligible. Now, how we are going to apportion it? Okay. Now, if the supply is used partly for business and other purpose or non-business purpose, then ITC would not be eligible to the extent attributable for the non-business purpose. Now, this was very clear in 16.1 also, plus 1, wherein it said that the ITC should have been used in the course or furtherance of business. So, if you are not using for your business, obviously you are not eligible for that ITC. So, if you have a business, or if that supply is partly for business and partly for other purpose, then you have to reverse to that extent. Then also, if the supply is used partly for effecting taxable supplies and partly for effective exempt supplies. Now, the government is very clear that for exempt supply, you are not going to get the ITC. So, if you are providing any exempt supply, then ITC to that extent needs to be reversed. So this is what is section 17.1 and 17.2, where it says 17.1 states that you cannot claim any non-business ITC, and 17.2 says that if you are providing both taxable as well as exempt supply, then ITC to the extent of exempt supply will have to be reversed. Then 17.3 also is there, which says what is the value for the purpose of the reversal. So in that particular condition, that section is not there here. So in that particular condition, 17.3 says that for the purpose of the value of calculating this ITC to ratio of taxable to exempt supply, the exempt supply will include sale of flat, sale of shares, as well as custom bonded warehouse sale. Okay, so all these three supplies which are actually exempt or which are actually non-GST. Shares is out of the purview of GST. Flat, matlab the completed flat is out of the purview of GST. Custom bonded warehouse sale is also out of the purview of GST. But all this will be included for the reversal of ITC. So ITC to that extent will not be available to the credit. So, for example, we can say that it's a proprietary firm, okay, and that proprietor is selling a flat. So, in that scenario, whatever common credit, not particularly directly related to the business, you are eligible. Directly related to non-business, you are not eligible. But your common credit, like the rent of your office, or your printing stationery, all this common credit, they are related to both your business as well as non-business. Okay, so then that common credit will have to be reversed in the ratio of exempt to taxable. Now there is this tax credit for banking companies. What does it say? That banking companies, financial institutions and NBFCs engaged in supplying services by way of accepting deposits shall have to either take the tax credit in the normal manner, that is the ratio of exempt to taxable, because we know that banking companies has a lot of exempt services. Or what they can do is they should avail only 50% of the eligible credit. They have to credit has to be eligible. Okay, first of all, and out of that eligible credit, 50% they can avail, 50% they forego. Rest of the credit shall lapse. Then the banking people have these two options. So once you exercise that option, it cannot be withdrawn for the remaining part of the financial year. Okay. And this restriction of 50% is not applicable when tax credits are in respect of the supplies from branches. So if there is any tax credit from the branches of the bank, you are fully eligible for that. But if there are other tax credits, then you are eligible only for the 50% the ones, or you have to then derive as the ratio of exempt to taxable and see how much credit is lost. But most of the banking and financial institutions are following the 50% rule. Now 17 to 17.3, 17.4 sub ho gaya. Still, there is this 17.5 section, which is the blocked credit. Now, what I was saying earlier, that even if you are eligible, still certain credit we will not be allowed to take. Okay, so what are those certain credit? First is about the passenger transport vehicles. Okay, used for passenger transport. If you are purchasing any passenger transport who has the capacity up to 13 persons, then the ITC on that particular transport is not available. So, for example, you have a luxury car whose capacity is less than 13 persons. So, when you are buying that car, and even if you are claiming as a capital goods in your books of accounts, still you will not be eligible for the credit of the same. But suppose you are purchasing a bus for your employees, the sitting capacity is more than 13 persons, then yes, you are eligible for that credit of that bus, because even if that bus is a passenger transport vehicle, still you are eligible for that credit. And suppose you are purchasing a delivery van for delivering of your goods. Now, delivery van is not a passenger transport vehicle, so naturally the credit of the same is available. All right, so this is the scenario. This is clause A, that if you are up to 13 persons capacity, ITC is not allowed. More than 13% capacity, ITC is allowed. And if you are using it for transportation of goods, ITC is allowed. Now, there are certain exceptions to this first one, that even if you are purchasing a passenger vehicle, which is having less than the capacity of 13 people, then also the ITC is eligible if there is further supply of such motor vehicles. Suppose you are in the business of supplying of motor vehicles, then obviously whatever motor vehicles you purchase, that you are going to sell further. So in such a scenario, whatever you are purchasing, the ITC is available to you. Transportation of passengers, that is, if suppose you are in rent-a-cab business, suppose you are in the business of a taxi, then yes, the whatever car you are purchasing, for which you are going to provide the passenger transport services, yes, the credit is available. Impart training on driving such motor vehicles. So suppose you are running a driving school where you are going to impart training to various persons, then the credit on the motor vehicle purchased by you is available. So in these three scenarios, motor vehicles, even if it is less than 13% capacity, ITC is available. Next is clause B. This is related to the food and beverages, outdoor catering, beauty treatment, health service, cosmetic and plastic surgery, leasing or renting or hiring of motor vehicles. No ITC is available. Membership of a club, health and fitness center, travel benefits extended to the employees, which as a leave or a home travel concessions. So all this ITC will not be available. So suppose you are sending your employee for an outstation trip, and whatever expenses you incur from that outstation trip, none of the ITC will be available to the company. If the company is providing membership to their directors, to their managers, then also the ITC will not be available. Whatever food and beverages, outdoor catering, ITC is not available. Any beauty treatment done by any person, whether by the director himself, except if you are in that business, for example, you are a film star where beauty treatment is the essential thing, then yes, the ITC is available, because you are going to use it in the course while providing your outward supply. So ITC is available if you are making the outward supply of the same. So if a caterer is providing a catering service, then obviously the ITC is available to that person, but not otherwise. And if you are keeping a conference and taking an outdoor catering procurement, then ITC will not be available. Now, ITC is available if it is obligatory for an employer to provide the same to his employees under any law for the time being in force. It means that under the Factories Act, a factory, after it has more than, I think, a certain number of workers, they have to maintain a canteen in-house. Then whatever food and beverages is purchased in that canteen to provide that service, it will be available because it is a compulsion by law by the Factory Act. Or if they are having certain number of employees, then they have to give the facility of traveling to the employees, then also the ITC is available. Third type of block credit is about the works contract, that if you are using any goods or services for construction of immovable property, or if you are giving certain works contract to somebody for constructing an immovable property or plant and machinery, only immovable property, and you are capitalizing the expense spent on this works contract. Now, for example, you want to repair your factory building. Okay, so you give a works contract to somebody that please, मेरा factory building खराब हो गया है तो repair कर दो. तो वो repair करेगा. He will repair the thing. All right. Now, when suppose he is capitalizing that expense, major repairs, he is capitalizing, he will not get the ITC. But if he is expensing out in your profit and loss account because maybe it's a minor repair, you just did painting and you expensed out those things, then you are getting the ITC. Right. Plant and machinery, if you are using anything in bringing the plant and machinery to action or to be active, then the ITC is available to you. And if you are further supplying works contract, taking works contract and supplying further works contract, ITC will be available to you. And suppose now if some manufacturer is building a factory building on his own, so whatever goods and services he will procure to build that factory building, then he will not get the credit of the same. So these two, clause C and clause D, are related to immovable property. Then this clause E, F, G, H, I, what are they saying? That ITC is not available. Tax paid by composition dealer, ITC is not available. Goods and service received by a non-resident, ITC is not available. When the goods are used for personal consumption, ITC is not available. If the goods are lost, stolen, destroyed, written off, disposed of, or given as gift or free samples, then also ITC is not available, which is utilized in either manufacturing those goods or supplying those goods. So that ITC will not be available. So suppose you are, say, manufacturing finished products, that finished product is destroyed, then raw material ITC will be available. Why? Because that finished product is destroyed. Okay, and there is no ITC connected to that finished product. But if you are a trader and your goods are destroyed, then the purchase side, whatever goods you have procured, that ITC will be not be available. So the goods which are stolen, lost, or destroyed should be the goods on which you have claimed the ITC. Okay, so manufacturing में क्या होता है, finished, अगर raw material, if your raw material is destroyed, then the procurement of your raw material ITC will not be available. But if your finished product is destroyed, then the ITC of raw material will be available because that product was not destroyed, it was consumed while making your finished product. Then there is one more, this thing, I think I've repeated this I, but it is not that. One more which has been just introduced, that is for the CSR activity. This has been introduced by Finance Act 23, but it has not been notified under the GST, wherein it states that ITC, if it is for your whatever ITC you have procured for your CSR activities, that ITC you are not eligible and the same will be blocked. So here I have given a description that suppose this is the input tax. If you are using for business, what are the situation? If you are using from non-business, then it is non-claimable. Okay. Now, when you're using for business, if you're using for wholly taxable supplies, it is claimable. For zero rated supplies, it is claimable. If you are using for non-taxable supply, it is non-claimable. If you are using for exempt supply, then also it is non-claimable. Now we come to section 18. Okay, section 18, which I had mentioned, is like ITC, which is under certain circumstances. Here, the ITC of stock can be taken. Whatever stock you are having, that ITC can be taken. But this stock should not be older than 1 year. So, and what are the circumstances? The first circumstance is that suppose you have taken, you are liable to register, and within 30 days time you have taken the registration. Then stock what is available to you on the date prior to the date of application, that ITC is available to you. So whatever stock you are having, for example, you are carrying on the business, your as per the goods you have to cross 40 lakhs of your turnover. Okay, so 40 lakhs you are crossing in March. Now in March, and on say 15th March, you are crossing that 40 lakhs turnover, and you are applying for registration on 25th of March. So it is within 30 days. Now on 15th March, you are having a stock which has the ITC, so say about 15 lakhs rupees. You are applying the registration on 20th of March, okay, and you are getting the registration by 30th of March. Then you can claim the ITC of that 15 lakh rupees which is there in the stock which is available to you. That is the first scenario. Because here you were liable to take, earlier you were not liable to take the registration, but when you became liable, you are eligible to claim the credit. Why? Because when you are going to supply that stock further, or when you're going to sell that stock, now you cannot use the word sell. It always has to be supply. So when you're going to supply the stock further, your outward supply, you're going to pay tax on that. So then ITC is available. Second option is that suppose you are taking a voluntary registration. You are not eligible, still you want to take the registration. So when you are taking the voluntary registration, so the date on which you are applying the stock, to that previous day, whatever stock is available with you, that ITC you are eligible. Here 30 days time was available. Now here suppose you are applying on 20th of March, then on 19th March, whatever stock is available with you, on that you can claim the credit. Next, you can claim the credit is you shift from composition to regular. See, in composition, you are not allowed to take the credit, okay, under the composition scheme. So when you shift from composition to regular, whatever stock you are having on the day which you are shifting, that ITC will be available to you because that stock you are going to sell under regular supply and not under the composition supply. In the same way, if you are shifting from exempt to taxable, the same thing happens. Whatever stock is available, ITC will be available to you. The person shall be allowed to transfer the ITC if there is a change in the constitution or sale or merger, then whatever ITC is available to you, that you can transfer it to the, for example, partnership form gets converted into private limited, then you have to cancel the partnership registration and get a new private limited GST registration. And then whatever ITC was there, whatever stock, whatever ITC is available to that partnership, that can be transferred. Even if it has an ECL balance, electronic credit ledger balance, that also can be transferred to the private limited company. Now, so just as we said that if you shift from composition to regular, you are eligible for the ITC. In the same way, if it is a reverse thing, that you are shifting from regular to composition or from taxable to exempt, then you have to reverse the ITC, whatever stock is available to you on that day, because that particular stock you are going to sell under either composition or under exempt supply. So that ITC you need to reverse. So the government का एक ही फंडा है, आप आउटवर्ड पे टैक्स भरो आपको इनवर्ड मिलेगा, आप आउटवर्ड पे टैक्स मत भरो आपको इनवर्ड नहीं मिलेगा. Only exception is the zero rated supply, that is where even if you don't pay tax on the outward supply, you still are eligible for the ITC. Capital goods. Now, suppose you are selling the capital goods, supply of capital goods, then GST on the sale value or reversal of ITC for the balance life, whichever is higher, has to be paid or reversed. Okay, so suppose you are supplying the capital goods say worth rupees 1 lakh. On that GST will come 18% will come 18,000. So either 18,000 and that capital goods ITC when it was purchased, say that time it was 10,000 and you have used that capital goods for say 4 years. So 12 months are still remaining. So 10,000 divided by 60 into 12. So 2000 ITC you have to reverse. Now, which is more, either 2000 ITC you have to reverse or 18,000 GST which you are paying, whichever is higher. So 18,000 is the higher amount. So when you are selling your capital goods, supplying your capital goods, you have to pay GST on the sale. So this is what is section 18 or the special circumstances under which ITC has been taken. This is the manner of utilization. CGST can only be utilized against the CGST, balance against IGST. SGST can be utilized against SGST, balance against IGST. And IGST can be utilized first against IGST. And it can be utilized against CGST, SGST in any ratio. Okay. Now, whatever ITC is available, just as I said, 17.2 May, that you have to reverse. Now, how you have to reverse? The formula is prescribed in Rule 42. Here, this example is given that total ITC is T. There is a non-business ITC T1, exempted ITC T2. This will straight be deducted. You are not eligible for that. 17.5 T3. Okay, business plus taxable is T4. So non-business, you are not eligible. Exempted, you are not eligible. 17.5, you are not eligible. Business plus taxable, you are eligible. तो अभी ये total ITC में से क्या बच रहा है? That is C2. That means total ITC minus all this ITC will be your common credit for business and non-business purpose both. So we name it as C2. Okay. Now this C2 is further divided. First is C2 may if it is towards completely exempt, then you are not eligible. Then if it is towards completely non-business, then 5% of C2 is reversible. Okay, but if it is for say towards exempt supply, then the ratio of exempt upon the turnover in the state, so that much D1, that much ITC will not be available. So C2 is bifurcated into D1, D2 and D3. Okay. So first is D1, that is the ITC towards the exempt supply in the ratio of exempt to total turnover. Second is D2, which is for non-business, that is 5% of that common credit. And so balance kya bachega? What will be left? That is C2, that is a common credit minus D1 minus D2. So this is how the ITC has to be reversed. There is ITC of the capital goods also has to be reversed if it is used for both exempt as well as taxable supply. So how it is reversed now? So for example, capital goods are purchased on 1st April 2018. ITC on the same is 6 lakhs rupees. Okay, this 6 lakhs, the effective life is of 60 months. So per month, ITC is 10,000. All right. So here what happens, and when you purchase the capital asset, you have to take the full ITC in the month of purchase, that is April 18. Then onwards, every month you have to reverse the ITC in the ratio proportion of your exempt supply to taxable supply. Suppose the ratio is 40%, then every month reversal will be 4,000 rupees. By mistake, I have written 40,000. It is a 4,000 rupees. So this is how the capital goods ITC has to be reversed if that particular capital goods is used for both taxable as well as exempt supply. There is this special rule 86, which the government has introduced, to curb this billing and this hawala dealers and all. What does this rule say? It says if your taxable supply is greater than 50 lakhs in a period, tax period, okay, so in a month, particular month, then from the ECL, you will be allowed to utilize only 99% and 1% liability you have to pay in cash. Now, this particular restriction is not applicable where if the said person or the proprietor or the Karta or the managing director or any of the two partners, full-time directors has paid more than 1 lakh rupees as income tax in each of the last 2 financial years, okay, for which the time limit to file the return has not expired, or has expired. Okay, so now for example, there is a particular firm whose monthly supply is say 50 lakhs, but at the same time, it has ECL balance, but the input supply is more than the output. You have more input tax credit than your outward tax liability. So in such a scenario, if the firm is a say proprietor firm and it is paying income tax of more than 1 lakh rupees, then this section is not applicable. If your firm is a partnership firm and any of the two partners are paying more than 1 lakh rupees, then this section is not applicable. If you are a company, then your managing director or whole-time directors are paying 1 lakh income tax, then also this section is not applicable. This section is also not applicable if you have received a refund of 1 lakh in the preceding financial year, then also this section. So in the case of exports, generally. Liability discharge is more than 1% in cash. So if you are actually having an outward liability, which is more than 1% and which you have to discharge in cash, then also this rule is not applicable. And also this rule is not applicable to government department, public sector undertaking, local authorities, statutory body. So the question here is that where is this rule applicable and why they have brought up this rule? See, there was an explanation by the government that this rule is brought out only to curb the hawala dealers, the dealers who only do billings, they don't pay the tax, they take the credit. So that is why they have brought out this rule. Baki, in regular circumstances, this rule is redundant. It is not applicable to any of the taxpayers. Now, so this was, friends, about the ITC basic structure, the basic 16, 17, 18. Now we have to understand the portal. What is the GST portal? GST portal, you know, we have to, this is what is displayed when you go to the GST portal. Okay, this picture, the login ID, what all services are provided. So this, we will experience it live. All right. So friends, this is your GST portal. Here, if you are having a new registration, you have to apply by this tab, new registration. Okay, in this new registration, if there is a notice and you have to file clarification, then you have to use this tab. And this is the track application status of what you have applied for new registration, what is the application status. This payment tab is for creating the challan. This is for track payment status. And if you have any grievance against any payment, then this is the PMT 07, which is there. These are the user services which is available. Search HSN code, generate user ID for unregistered applicant. That is, if you, any unregistered dealer, if you recently, there is one rule which has circular which has come wherein an unregistered applicant can also claim the refund of if that incidence of tax is not passed. So that user ID is generated here. If you want to search any advance ruling, then also it is there here. Holiday list is there. If you want to locate any GST practitioner here, search BOE, verify RFN. Now search BOE means what? That if any of your imports is not showing in 2B, then you have to do this search BOE and fill in those details of what is applicable. And that particular import will get reflected in your import IGST will start getting reflected in your 2B. Verify RFN. RFN is the reference number of any document issued by the department. So if you have any offline departmental document for which you want to verify whether it is correct or not, then you have to write that reference number here, submit it. If it is verified, that means the document is correct. So this is what is the user service. These are the refund. There is only track application status. This e-way bills system, they will just put you to that portal. Now here the GST law is there. Download may you have various offline tools. So many offline tools are available. This is the GST statics which will be available for any particular period. of 3B filing and everything. This is a search taxpayer facility wherein you can search any taxpayer by GSTN, by PAN, by a temporary ID, or by composition taxpayer. So these are the help services, helpline services, and this will get you to the e-invoice portal. So when you log in, this is the dashboard that is reflected. Here, there is a view profile wherein what is your profile will be reflected here, your name, business. What is this in red is your actual jurisdiction, which will be reflected. Then name of the place of business is there, contacts, other business is there. Then here, what is the history of amendment, whatever amendment you have done, if you want to change your password, if you want to see what is your bank account status, if you want to have your registration certificate, whether Aadhaar authentication is done or not, if you want to register or update your DSC. So all these facilities are available in this view profile. Okay. Then these are the quick links to check your cash balance, your liability ledger, credit ledger. Here, this is your return calendars, last 5 periods return file. They will give, when you click here, they will also give you the date when it is filed on. Okay. This is the return dashboard, which we will go later on. If you want to pay any, you can create the challan. This is where you can view all your notices and orders. This is your annual return. Okay, now we move on to the services here. What all services? The same registration here, amendment, application for new registration, withdrawal for composition levy, cancellation of registration, amendment in core field, non-core field, everything is there here in the registration tab. In the ledger tab, you have electronic cash ledger, credit ledger, liability ledger, payment towards demand, and negative. Now, in the cash ledger, you have this file PMT09. Now, what is this file PMT09? You can transfer the amount within the same GSTN. Matlab from interest you can transfer to tax, from penalty you can transfer to interest, from tax you can transfer to interest. That is within the same GSTN. And file PMT09 for different GSTN but same PAN, that is if you want to transfer anywhere with any cash amount in your cash ledger, if you want to transfer to your other branches, then also you can transfer. And this is your view filed PMT09. So this benefit is there. Then there is this electronic credit ledger, which gives you the details of the credit available in the ledger. Okay. Now we move on to the returns. In returns, there is this return dashboard, wherein you will get how you have to file the return. You get the financial year, you get the quarter. Here you have to select the month. When you select the month, you will see these boxes will open. This is your GSTR1. Here it is written due date 11th May. So you have to file by 11th May. When you open the GSTR1, you get the B2B supply records, the B2C export invoice, then nil rated, credit note, debit notes, if advances. Then if you have to do any amendment, then here there is the amendment records, B2B, B2C, exports, advances, credit note, debit notes, whatever amendment you want to make. If you are falling under e-invoice, then here you will get the e-invoice history. Then once you go ahead, it will generate the summary. Okay. And when you go further ahead, it will display to you the summary. Okay, so suppose, and if you want to reset your GSTR1, you have to do this reset. So when you go further, you will get a full summary of what is filed in that draft format. And I'll tell you one thing, that if your GSTR1 falls in the previous month, then 3B will not be displayed. 3B will be opened only in when that particular month starts. So April month has started. I mean, the May month has started, for which you have to file the April returns. Then 3B is open here. Otherwise, till that time, the 3B is not open. Then this is GSTR 2B statement. This statement will come only after 14, only on 14th of May for April month. Okay, so at present it will not display anything. Shall be, see here it is written, 2B shall be available only after last cutoff date, that is 13th May. So from 14th, the 3B is available. 2B. This 2A will be available every time. Whatever B2B invoices, whatever suppliers have filed, they will be there. See, these people have filed the return for April 23. So then they are available in the 2A. Okay. So this is about the returns, GSTR1, GSTR3B. Then this is one very important report which is generated here. In this return tab, this is tax liabilities and ITC comparison. Here you will get a comparison of what is your liability in GSTR1 and what you have paid in 3B. So your difference will be reflected here. Whether it is a shortfall, it will show in negative. If you have paid in excess, it will show in positive. Okay. Now this may be the reason, because maybe we have shown some turnover of previous period in April 22 GSTR1, but at the same time tax has been paid earlier only to avoid the interest liability. Then this is tax liability and ITC summary. It means whatever you have claimed in 1, 3B, your shortfall, cumulative shortfall, and ITC also whatever you have claimed in 3B and what is reflected in your 2B. So this is as per 3B and this is as per 2B. Here also, if it is negative, it is shortfall, and if it is positive, it is excess. So see here 3B में ज़्यादा claim किया है, so this will come in red. Okay, that means कि आपने ज़्यादा claim किया है. Same goes here, 3B में ज़्यादा claim किया है, so this will come in red. Okay. At the same time, यहाँ पे 3B में कम claim किया है, so this will come in minus. Okay. So here they have given a note that ITC claimed in 3B is net of reversal of ITC and includes reversal made on account of reverse charge. Therefore, ITC reflected in 3B might be lesser than what is auto-populated in 2B. And represents the report generation that will be used until July 22. The written period up to which the continuous version of 3B table 4 was applicable. Now you can download this everything, all comparison reports in one Excel file also. So if you click on download Excel file, the whole all the comparison reports will be downloaded in one Excel file. See here. So this is tax liability other than exports. This is tax liability due to reverse charge, what you have paid in 3B and what is auto drafted in 2B. Okay, so here see you have paid in 3B 2,700, but nothing was auto drafted in 2B because maybe it's a procurement from unregistered person. Then tax liability due to exports and SEZ. Then input tax credit other than imports. All red means you have claimed more in 2B. Okay. Then import of goods if you have any. And reverse charge liability declared and input tax credit paid. So here declared is 2,700. ITC taken and paid also 2,700. So both are getting nullified. So this is a report which is very important, which is given by the portal. And this is an online report, but you can Because 22-23 is finished, we are getting for all the periods. But if 22-23 is not finished, this is on the basis of the returns, whatever you have filed. Payment already I have explained to you. Now we come on to the user services. This is a very important thing. Lot of user services are provided by the department. In my applications, you have to, new application, you have to select what all you want to apply, whether you want to apply for advance ruling, whether you have to pay tax via DRC 03, whether you want to apply for LUT, whether you want to apply for appeal, refund application, rectification of any order, restoration of provisional assessment. All this you can apply under this my application. Application for unblocking of e-way bill, all this you have to apply and then new application. At the same time, if you have already applied for something, then you have to put here, say refund, you have to put the date here, from date to date, and if you do search, you will get all your refund applications, which is there here. So that is available in my application. My saved application, you will have whatever draft format you have available. See, there are so many amendment we have tried to do, which the date were expired, but still it is there in my saved application. Okay. Then view download certificate, you can download the certificate. View notices and order. Here you can view the notices which has come to you, if any. Then view my submission, again, whatever submissions you have made on the basis of the form number for which you have to select here all these form numbers, and on that basis you will get the list of all your submissions. Okay, so application for amendment of non-core fields, for core fields, for any clarification filed, all this, any reply to show cause notice, all will be available here in view my submission. Then comes search HSN code. This is an excellent facility which is given. Whatever HSN you write here, you will get the description or anything. Suppose I write 9967. Then it is the supporting services in transport and you will get the HSN. You can get the HSN on the basis of the description also. Suppose I write here transport. So you'll get this all are the HSN which is available for transport, motor vehicles also. So suppose I write transportation. Then this all services are goods are available for transportation. And suppose I write transportation service. So service code will be available, but again this is showing transportation of goods only. Suppose I write goods transport agency. Then the HSN code of is displayed here on the basis of the description. But I am showing on the goods. Suppose I click on the services and I write here transport. Then I'll get all the transport 9964, 67, 65, all this we will get here. Next is the holiday list. You are getting that what are the holidays which is described here for your period 22-23. Next feedback, if you want to give LUT, if you want to apply, then you have to see here, view my submitted LUT, means you can see the LUT of any year. You can type here that this is letter of undertaking, you have to write the date and then search, so you will get the submitted LUT. Okay. Next is locate GSTP, engage any GSTP. Pending for action is ITC 02. Suppose you have filed any claim for either claiming the ITC in the electronic credit ledger or reducing it. View additional notices and orders are the DRC 0101A, ASMT 10, all will be shown here in view additional notices. Okay. Then communication between taxpayers. This is a new thing where you can communicate between the two taxpayers. That is, suppose you have received any notification from recipient, then record will be displayed here. If you have received any reply from supplier, then records will be displayed here. If you want to send anything, then you have to compose notification to whom? To one of your supplier or recipient. You have to write the GSTN and that message will go to that person. Okay. This is the inbox, this is the outbox, whatever records you will submit. So this is a very good thing which has been, so suppose if any supplier does not file their GSTR1, then you can communicate through this and this will be a proof enough with you that you have communicated to that recipient. So this is a very important user service which is provided by the GST portal, which is not used by many. Then you have My Masters. This is a new facility which is given wherein these masters are created of your products, whatever you are supplying, your supplier or recipient master. Whatever recipients you are having, whatever suppliers you are having, you will incorporate in this master, and then that GSTN will be available in your master at any point of time. Then again you have search BOE. Then advanced ruling if you want to search for any view PMT03A file. This is PMT03A file. Matlab, suppose you are filing any DRC03 for reversal of credit, or you are filing any PMT03, then the officer has to acknowledge that. So for that, the officer has to file this PMT03A. So only when that officer files 03A, either your credit will be reversed or it will be recredited to your electronic credit ledger. Then this is the especially for GTA Annexure 5, which you have to file whether you want to opt for the forward charge. So this there, and then verify RFN that we already discussed, that is your reference number. All right. After user services, this is the refund tab where you can apply for the refund. And here there is one very important, this track the invoices of your exports. So whosoever is exports, whether the iState, your invoices has been transferred to iState, you can select the financial year. Suppose I select 22-23, you can select the month, I select March, I do search. Here it says, there is no, here it says that you have to complete the Aadhaar authentication within the 30 days of allotment of Aadhaar. Invoice cannot be sent due to negative ledger balance. What do you mean by negative ledger balance? So when you view this export ledger, you will come to know what is this negative. Here, there is no negative balance. So that means all the invoices have been transmitted technically. So if I say 22-23, say February, month of February also. This is the zero rated supply which you have shown in your 1 and 3B, and this balance should be zero. It cannot be negative. If it is negative, the invoices will not get transmitted. There's the invoices are not getting. Acha, Aadhaar authentication hua nahi hai, that is the reason, but it is successful. So no further Aadhaar authentication is required, but still it is not shown here. To check now. So this is what is about the refund. This e-waybill system, it will navigate to e-waybill system. Track application status means any application status. This is another dashboard wherein your electronic liability register, cash register, credit ledger will be there. Here, if there is any notices or orders, and it will be displayed here. Saved forms is any application you have in your draft folder, which I said na 3 applications है वो यहाँ पे दिखेगा. File returns के लिए भी tab है, you can file it from here. Pay tax. Then this is the turnover which has been there on the basis of your whatever returns you have filed, that will be displayed here. And there is an advisory that if you want to change this, then you have to follow whatever is given in this advisory. That this turnover is not your actual, so this you have to view or update it as per your actual turnover. And this you cannot update after a certain period of time. So this is what is about the portal. This search taxpayer option is a very good option if you do that from the login of any GST number. Suppose I go for any GST number. All right, and I search. I'll get the details of everything. The name of the business. You can view the additional trade name. What is the profile? What is the jurisdictional officer of that business? What is the place of business? You will get. Then you will get approximate turnover. What is the turnover? What is the gross total income of that particular business? Whether it is Aadhaar authenticated, yes, and on what date? Whether the percentage of is how you are paying the tax, 20% and above hai, so yes, 20% and above. This is the description of the goods and services. Nature of business activity, this is the core, that is service provider. You get the name of the proprietors and also you get the nature of business. You get the show filing table, matlab what all returns that particular person has filed. E-waybill history, also you will get liability paid percentage, matlab आपने पूरा जितना GSTR 1 में फाइल किया उतना पे किया कि नहीं, तो यहाँ पे पूरा 100% you have paid. Show return filing frequency, मतलब monthly है, quarterly है, what it is. So when you are logging in from your, when you are searching the GSTN from your login, then you are getting so many facilities. Okay, but suppose I'm logging out and I'm searching the person by GSTN. Then I'm not getting all these facilities. I get the name and everything. I do not get the HSN. I get the supplier services. I get only the filing table and written filing. I do not get the turnover details. I do not get the e-waybill history. I do not get the tax payable percentage. All those things I'm not getting if I'm searching the taxpayer from outside. But if once I'm logging in and searching for any taxpayer, I get the details in a much detailed manner. Now, why do I need the turnover of any particular person? Why? Because you all are aware that when the turnover is more than 20 CR, then that person is eligible for e-invoicing. And if that person has not given you the e-invoice, then it is as good as no invoice given. And then there are chances that your credit is lost. So that is the reason the turnover of a recipient is very important. You should be aware of that. So friends, this was the live experience of GST portal which I have given. Now, thank you so much for your attention. Any questions? I am ready to take up.
Thank you,
And
Deepali
my
ma'am.
friends, never stop learning because life never stops teaching. And there is always that picture abhi baki hai mere dost, right? We also give live updates on this phone number. You can note down the phone number and please, I'll take up any questions in that. Should I stop sharing the screen or should I share?
It's fine. I mean, Thank you, Deepali ma'am. Like this was a wonderful session. This was indeed a very insightful, informative session for all our members. There are a few questions, so if you allow me, I'll just take a few
Yes.
of the questions. Yeah. So there's a question that can an event planner take
Just
ITC
give me
or-
a second. Just give
Yeah.
me a second.
Yeah.
So, yeah.
Yeah. So can an event planner take ITC of
Can you
catering
speak a
service?
little louder? I'm not
Yeah.
able to hear your voice.
Are you able to hear?
Yes, please.
Can an event planner take ITC of catering service availed as a part of event organized for his client with other arrangements like decor and rent, etc.?
See, that event manager is taking the outdoor catering and supplying it to the other person by way of a composite supply of event management. So definitely you can claim the ITC of outdoor catering.
Okay, thank you, ma'am. And there's another question like that. Is ITC available for finished goods given as free sample for marketing purpose?
No, unfortunately, see, ITC available, matlab, what you are trying to say, if you are a manufacturer, then raw material ITC will be available to you. Okay, but if you are a trader and you are supplying as free samples, then the ITC will not be available.
Yeah, in your
And
session,
if you are in a pharma company, there was a separate circular which was issued by the department that how you are supposed to claim the ITC of the free samples which you are giving to the medicinal practitioners.
Otherwise, free samples, there is no ITC that you can avail.
Yes.
Okay. So, and another question is like new registration is rejected for want of consent letter from the landlord for the place of business. So, whether registration can be completed by uploading the consent letter or fresh registration has to be done.
This is out of syllabus, but still I will reply. Fresh registration needs to be applied.
Okay. Thank you, ma'am. And one more thing is like in practical life, how does one match the invoices reported by the supplier and registered person to be able to claim ITC? I mean, they are saying that there's a huge volume, so it would be very difficult to match invoice declared by the supplier in the month of filing the GSTR1.
I'm not able to understand.
So they are saying that there is how to match the invoices.
Acha, match. Okay, there are so many softwares available for the matching of the invoices. You can use any of the software and do the thing. But just because of the quantum of the invoice, you cannot escape from saying that I cannot match such huge amount. And I will not be, I will claim the ITC as per the books. And suppose even if you are claiming the ITC as per the books, then you should be ready to pay the interest amount, whatever is charged if you are claiming ITC earlier than what is required.
Okay. So, ma'am, again, it is not related to ITC, but it's related to whether a charitable trust needs registration for GST.
Charitable trust, yes, of course, charitable trust is a business carrying on business, and definitely they have to take registration if they are falling under the limit prescribed by the GST law.
Okay. So, ma'am, these were the few questions like posted by the participants. Even I just like when you are explaining the PMT 09. So you are saying that we can adjust the penalty with the interest and sort of thing. So is it like something like IGST also can be adjusted with CGST, or you can shift the balance from IGST to CGST?
Of course, you can shift anywhere. Any tax amount, interest amount, penalty amount from any of the act can be shifted to any of the act in the cash ledger.
So is it interchangeable? Like GST, CGST can be shifted to IGST also?
Yes, CGST can be shifted to IGST also and SGST also. Because see, in the cash ledger, it's your cash. Okay, just say bank may you have your cash. Similarly, in this GST electronic ledger, that's your cash. So either you claim refund of that cash, or you shift it to some tax interest, whichever dues you are supposed to pay. So you can do that.
So according to your liability, you can adjust whatever you excess you have in some other bucket.
Yes,
okay.
This can be done within branches also.
Yeah. So I can understand that this is a very, very vast and very complicated topic which you have covered, like the ITC, and I can see with the slides what you have made, it was very easy for us to understand. Otherwise, the sections like sometimes gets very complicated. for a
Correct.
person to go through it, especially the young women who have just started their practice.
Correct, correct.
And GST is the like core thing. So anybody who wants to start with practice, any client will come up with the GST thing as the
Correct,
first
correct.
client. So
Right.
this was really very informative and will be very helpful for all the young members what we are targeting through this series. So like of course like we have covered all the question and answers, and it was very informative. Um, I would like really thank you for giving in detail with so many common examples like which we normally will come across in a routine practice.
Yes.
So you covered all and helped us to understand those things. And you went through all the important tabs of the GST portal also. Like some were very informative about the communication that you said between the tax people. I
Yes.
think the most of the people are not using it.
Nobody
that's
is
why-
using it.
Yeah.
Not
And the
most,
things also
hardly
what-
anybody is using it.
yeah. And what the key thing you told about the search, like how you can search your
Yes.
by the GST number, and which can help us, to prevent to go into the dealings with somewhere where we can have a loss
Right.
by not having the correct information, like invoicing you mentioned. So it was really informative. It was really flawless way of you presenting this topic. So it helped us very nicely to understand very vast and complicated topic, I would say. So thank you very much, Deepali ma'am. Like I am was thinking that this big thing would almost go for a 4-hour session or something, but you finished in a very short time of 2 hours, taking both the topics, like even ITC as well as the GST portal, and going to each and every
I
tab.
thought there will be questions, so I left 10 minutes time, but now we
Yeah,
still
yeah.
have spare time.
Yeah. So I also I think I've covered all, no other questions. Okay, one more question has come. Like, can you please elaborate on OIDA services?
OIDR.
Yeah.
OIDR services is not related to this subject proper because it doesn't fall into this ITC thing. It's a separate service altogether. So it's an online data and retrieving services wherein if anybody is providing any online services, then they have to pay the tax. For example, you say Uber. Okay. So Uber is not Indian company, but they are providing online services here. They are providing a platform. So this Uber people either have to register in India or they have to have somebody who has to register in India under this OIDR services and pay tax under that. That is just a crux of the definition which I am saying.
Thank you, ma'am. Like one more question is there. That is whether one GST is applicable for all different vertical of business.
Particular business in a particular state, yes.
Okay.
See, earlier what it was, the section said that if you have different verticals, for example, a proprietor may run a 2-3 business or a partnership may run 2-3 business. So they were supposed to have separate GSTN for each vertical. Now that section had a change. It changed to like that if you are having more places of business in the same state, then you can have a separate GST number. But so for different verticals, you can have the same GST number if your place of business is same. But if your place of business is different, then you can avail the option of having another GST number.
GST number.
It is not compulsory.
Okay.
One state, one registration.
Yeah. So we'll take couple of more questions because 2 more have added just now.
Sure.
So someone is asking like, do doctors need to take GST registration if services cross 20 lakhs?
Doctors, if they are providing any taxable services, yes, they have to take the registration. But if they are providing only the doctor services, which is exempt from GST, then they are not liable to take the registration.
And what would be the
But
limit?
generally, doctors have that renting income and all, so they have to take the registration because then for counting the 20 lakhs turnover, the turnover aggregate will be included.
Okay. Okay. So now last minute, I'm just checking. I think we have covered all. So like the super session, like with all the information, all the questions we have covered, like just before, and still we have 5 minutes. So I would like thank you from all our committee member that you have taken out your valuable time for us and giving us so like experienced and knowledge inputs about the topic. So I'm very, very thankful to you. With this, I would like thank you, ma'am, and all the committee members and the participants. And like you have given us very nice last notes also. So I would say that like we would conclude if you have, ma'am, anything to
Definitely.
share for our young women like who have started their practice,
Correct.
like you can have your last words, ma'am.
Yeah, thank you so much. I appreciate the committee for giving me this opportunity, and I thanks the participants also for listening to me and for your kind words, Karishma madam. You have, without any reason, चने पे
No.
झाड़ पे चढ़ा दिया.
Hey, ma'am, like we know it, you know each and everything. Like anything, I would think if one tab also you have not left, because this is which comes with the experience. Like you knew where to go, how to show the things. So like that's why I said it's all things which was correct with the thing content what we got.
Thank you so much.
That's
It's
right.
daily
Thank you.
devout practice matters.
Thank you, ma'am. Thank you,
Yeah,
ma'am.
thank you.
So now with this, I think so we should conclude our session. No other questions coming up. No. So thank you, ma'am. Like I think so other things were very nicely explained, and that's why no other questions. Thank you, ma'am. Thank you for your valuable time. Thank you for the team. And now I think I should ask the IT team to conclude the session and close.